That's when the markets are finally going to understand the predicament that we're in. I mean, they should understand it already, but for some reason they need a safe to drop on their head. And when that happens, then they're going to be looking for inflation hedges. They're not going to care about Bitcoin. That's, for gamblers. They're going to look for a real store of value, and they're going to be buying gold. They may be buying silver as well. And I think they're going to be buying all sorts of real assets.
Natalie, what do you make of this argument that Bitcoin is in fact an inflation hedge and that the focus should be on more than just what its price is at right now?
Yeah, hi. Well, thanks so much for having me. Look, I think we have to remember that in Bitcoin's entire existence, the Fed has been inflating and stimulating the economy and debasing the currency. And what's happened to Bitcoin in 10 years? It's gone up 500,000%. How about last year, just 2021, a shorter time horizon? We printed. We saw CPI get to 7%. S&P went up 28%. Gold fell 7%. And Bitcoin went up 70%. So what's the argument that it's not a hedge? I think Peter will agree that when you have a long-term investment in mind, you can't have a short time horizon. And if gold is still an inflation hedge, then Bitcoin is sort of a turbocharged version. Bitcoin's going to go up 10x while gold sort of putters around. And, with the Fed tightening or pricing in tightening, we expected that pullback. But if the Fed loosens again, like Kashkari sort of hinted today, maybe marking a bottom, then that will send everything going, especially Bitcoin.
And Peter, what about that? Because gold looked to be almost bulletproof as it hit 2-month highs at the beginning of this week. Now, I know that if you're a gold hodler, if there are such a thing, I know to Natalie's point here, you can't really chase that price. But what do you make of those losses we've seen over the last couple of days, as we've seen concerns about what the Fed's doing, as we've seen concerns about inflation, as we've seen markets drop?
Yeah, well, first of all, most of the gains that Bitcoin enjoyed last year have been lost. In fact, people who bought Bitcoin last year, many of them are already down 50%. And of course, there's 17,000 other cryptocurrencies that people were able to choose from, and they're all getting obliterated. And none of them have anything in common with gold. They all have something in common with each other. But Bitcoin is not digital gold, and it's not an inflation hedge. It's just a speculative token, and its price is going to be a function of supply and demand for that token. It really has nothing to do with what the Fed is doing. As far as the dollar is concerned, or gold is concerned, rather, the reason that gold has had some problems recently is because the market actually believes the Fed. They believe Powell when he says he's going to do whatever it takes to bring inflation back down to 2%. He's going to raise interest rates. He's going to start shrinking the balance sheet, and the markets are believing Powell. But I think he's just bluffing. And even if he follows through with the rate hikes he's promised, that's too little too late. It's not going to be nearly enough to slow down inflation, and so it's not going to restrain gold. The type of rate hikes that would be required and the type of balance sheet reduction that the Fed would have to engage in to actually get in front of the inflation curve and bring it back down is much too high for the bubble economy to bear. If Powell actually tried to fight inflation, he would destroy the bubble economy. The stock market would crash. We'd be in a massive recession, lots of unemployment, huge financial crisis, and we would force the government into insolvency. And once the markets come to terms with this reality, they're going to be buying gold.
And Natalie, I think there was a period of time when we looked at Bitcoin as digital gold. But now, to Peter's point here, a lot of this has become a speculative asset. And I think a lot of that comes from the fact that we see so many institutional investors in there now. And what you're seeing is it moves along with the market because institutionals are trying to cover their money back and forth. Is there something to that point, Natalie?
Well, I do agree with Peter that the Fed is bluffing and they're going to have to insert liquidity. And we've seen that Bitcoin is largely liquidity driven, just like equities. And it's been sucking money out of both gold and bonds. Now, the more money that piles in, obviously the price goes up. And also with futures trading, does Wall Street have the power to push around the asset on the margin? Sure. But if the secular trend is up, which it is, they can't push it around for too long. And when it comes back, it has the power to spring up really hard and really fast because the fundamentals for Bitcoin are there. The holders aren't selling, including Peter's son, Spencer. The number of addresses are going up. We have the hash rate near all-time highs despite geopolitical issues in Kazakhstan and Russia. And, I think that when liquidity resumes, because the Fed realizes they cannot taper into a slowing economy, it will send stocks going and Bitcoin will go even higher.
Now, Peter, I want to give you a chance to respond to that, but also when it comes to where we're seeing the interest in inflation hedges, where do you see it going? And is it going back towards gold, or are people paying more attention to those other cryptocurrencies that are out there and going towards those?
Well, first of all, Bitcoin isn't sucking anything out of the gold market or even the bond market. The only thing Bitcoin is sucking is money out of the pockets of people who are foolish enough to buy it. And that would include my 19-year-old son, Spencer. But I think right now, most people are not really worried about inflation. Again, they believe the Fed. So they think that the inflation problem is going to be solved. Once they realize that it's actually going to get worse, and once the Fed is ultimately forced to do an about-face because Powell thinks that he can raise rates without hurting the economy or employment. He thinks we have this strong economy. We don't. We have a gigantic bubble, and even the smallest of pins is going to prick it. In fact, just talking about raising rates and this has already pricked the bubble. We're already pretty much in a bear market now. And so I think that sometime this year, whether it happens before the first rate hike or after, Powell's going to cave, and he's going to go back to bigger QE, and rates go back to zero. And that's when the markets are finally going to understand the predicament that we're in. I mean, they should understand it already, but for some reason they need a safe to drop on their head. And when that happens, then they're going to be looking for inflation hedges. They're not going to care about Bitcoin. That's, for gamblers. They're going to look for a real store of value, and they're going to be buying gold. They may be buying silver as well. And I think they're going to be buying all sorts of real assets to get rid of dollars. But real assets don't include any of these cryptocurrencies. I mean, there are too many of those, and they don't have any actual value to be inflation hedges. So I think when the air comes out of the stock market bubble, as it is, it's coming out of the crypto bubble too.
Natalie, I want to give you the final word here. Do you agree with the notion that Americans aren't concerned about inflation right now?
I think it's the number one thing that they're concerned about, because wherever they go, they see prices going up 40% at, the gas prices are going up at the grocery store, meat, their houses, rent is going up. And I think they're extremely concerned, and they don't own assets the way that the rich people do, right? So we've made a lot of billionaires richer through quantitative easing. And as Mr. Peter Schiff said, the quantitative easing is going to have to continue. And when it does, Bitcoin will go up just like it has for the last 10 years.
Natalie,
I agree. Consumers are concerned. I'm talking about investors. They're the ones that are clueless, but consumers are very concerned, and they should be. Right. And unfortunately, it's going to get much worse for consumers.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where do you start? My name is Gunnar, and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.